The housing market plummeted in January by 5.5%. Today, March 2023, the housing market is in a completely different status point than it was less than 60 days ago. So what is the difference? What's happening right now that's making the climb in the market so real? And let's go over and let's talk about the numbers. Let's talk about what this means for investors and end buyers. So understand that we just got catastrophic news about regional banks collapsing all over the United States. So what happens and what is the effect of this to you, the investor and the end home buyer? Well, understand that because of the wake in everything that happened to the regional banks across the nation and the instability of what the Fed saw, mortgage rates actually came down and they're at 6.5% on the ever so popular 30-year fixed mortgage, which means that home buyers are sitting in a place that they want to buy, refinance, and they're releasing some capital in the market. So hence, this was already happening before the release of the regional bank collapse, but this was just since this Monday. So what has happened prior to this, and how does this affect where we're moving over the next few weeks, the next few months, and into the year of 2023? Now, I personally believe that the Feds, because they aggressively came out and said, don't expect to see interest rates or mortgage rates go down throughout the entire calendar year of 2023. Now, in spite of that, mortgage rates had already started to drop in the early part of February 2023. So we saw the market combust. We saw builders' confidence go up, and so much so that over 1.5 million new permits across the United States were pulled for new build construction that were not pulled in January of 2023. That's an increase of 9.5% over February. So ladies and gentlemen, builders' confidence is back up. Homes are selling, so much so that completed new construction just over the last 30 days has increased to over 12.12%. So when we look at January year over year, that's an increase of over 12.8% of completed new single-family residential homes. And so the market is starting to soften in regards to the recession, meaning that the market is starting to actually stimulate into buyers' confidence, construction and contractors' confidence. And so, ladies and gentlemen, if you're looking at buying homes at a discounted price, you need to hurry, because housing right now is going to start becoming more desirable and more expensive based on supply and demand. And so I've been talking about this for the last year. I said embrace high interest rates, embrace this recession, because along with financial distress in the market and recessionary market comes reduced prices. When values reduce and prices go down, investors should seek and sweep up as much inventory as they can in spite of high interest rates, because they can refinance later. Now, with all the regional banks collapsing, my projection is that we're going to continue seeing interest rates go down. The Feds have to act quick. Buyers' confidence and customer confidence in the banking sector has to go up. It has to increase. And so when the market sees something so catastrophic, the Feds have to act so aggressively so the masses gain confidence in the financial structure of where we are as the American U.S. finances sit and plateau. So understand, right now is a great time to start investing. I've been telling people to buy land, build houses, because there's not enough inventory in the market and there is so much profitability. Right now, we just finished selling homes within our inner circle educational group, where people are selling homes in excess of $20,000 to $30,000 per unit in the $700,000 to $800,000 market sector. So it's above the average median. Now, the average median home is still sitting at about $380,000 right now today. So the median buyer, meaning the average person that sits at an income level of $90,000 per year or less, is still walking into homes under $400,000. Now, because builders' confidence is going back up, companies like D.R. Horton, Lennar Homes, Toll Brothers, these guys are starting to pull permits again. The land that was once going to sit for an extended amount of time, and they didn't know when this land was going to they didn't know indefinitely when this land was actually going to turn key and give them the financial release to start building. They're pulling permits on it again. As they start pulling permits on that stuff again, ladies and gentlemen, and the inventory crisis becomes real again, what's going to happen is real estate prices are going to go back up. So you fix and flippers, all of you guys that are wholesaling, understand that the compression of pricing because of inflation is going to become real again if you don't act now. So market alert, pay attention, invest today, and set up your financial returns for monetary gains today, and don't wait till tomorrow. The market is starting to show promise. It's starting to show its release, and it's time for you, the investor, to go out and profit. For more Market Watch update on what's happening in the housing market daily, weekly, and monthly, click below, pound that thumbs up button, click and subscribe to our YouTube channel. At the end of this, I want to put a market sector release video on what's happening in the banking industry right now with the regional banks, so you can better understand how that correlates with our single family residential housing market and how you, the investor, can continue profiting from real estate.